What is up, YouTube? What's up, guys? The Composer Trader here, and welcome back to another trading recap of the most recent trade that we took inside of the TCT community. So, we have been talking about this range on ETH for a while, but we tried yet again another long opportunity that ended up stopping us out for a slight profit, but did not get the rotation that we wanted. So, we'll be talking about that today and also briefly talk about what I am looking for next on ETH, since we have been showcasing overall accumulated price behavior, but we have yet to see the actual follow through towards the upside. So if you watched my previous YouTube video, you will know that we were looking at this accumulative range right here on ETH right here, which is a Model 1 accumulation schematic with your tab 1, with your tab 2, and with your tab 3. And then from there, zooming into this environment, from there we saw that lower time frame accumulation schematic, where right here you had your lower time frame TCT model, and then you had your low time frame 1 and your lower time frame 2 and your lower time frame 3 that retraced into extreme supply. We already had the refined entry at this higher time frame second tap and the lower time frame third tap right there, and then we had that lower time frame Model 1 flow over in the Model 2 on the higher time frame. Extremely clean looking return to zone, range and efficiency, everything was there. But let's say you were awake in Asia and you ended up trading this right here. You would have a nice refined entry trading a TCT model, low time frame TCT model as the extended tap from your Model 1 into a Model 2. And this was basically the play that we were looking at, right? This refined entry. But then what happened is that price pushed up, and actually at the recording of the previous video, price was already pushing down. It was failing to break past this volume area high right there and fill that inefficiency within the premium section, but instead we went lower and we created supply right there. Perfect. Okay, now actually we entered a position around the time of the recording of that previous video, because there was a potential that we ended up getting a rotation towards the upside again, which we did end up getting, but yet again it did not have any follow through. But what I want to talk about is right when we entered this position right here, we were anticipating on a 1, 2, 3, and this was an overall 4. And we were anticipating on trading the extended tap of the Model 1 accumulation, and we were using TCT and TCT as our refined entry, where right here we had that beautiful return to zone. We also had a range and efficiency, barely any supply holding price down, so it should be a fairly simple move up. And the reason why, we trailed our stops to break even is because there was no demand below these lows that could protect price from taking them all out, and then you got stopped out right here. Okay, so you can also see the moment price takes this low, it also rotates back down all the way to this low. But here comes the important thing to understand. When we are trading this lower time frame TCT model as our refined entry, when we are staying inside of this low time frame range, well, that is when these lows are protected. The reason for that is because they're part of your local Wyckoff schematic. But the target of this local Wyckoff schematic is the range high, which already gets completed right here. So the moment you complete that technical target of your low time frame Wyckoff model, these two taps here, they're not protected anymore because the TCT model is complete. So there's no market maker protecting price from taking these lows, since the accumulation has already fulfilled its job. We are just anticipating on a rotation towards the upside. And since we also got a range breakout, which you can validate by using the L2, you can get the rotation back up. But unfortunately, that was not the case and we got stopped out. However, what did price do? Instead of having follow through towards the downside, it actually showcased bottoming price behavior while sweeping this liquidity. And if you're looking at this from a high time frame perspective, you could have a Model 1 accumulation go over in a Model 2 that goes over in an extended Model 2, and price simply pulled back towards the extreme liquidity of the initial expansion prior to that. Where you can see right here, this is that first low, a high, a higher low, a higher high, a higher low, and a higher high, right? So that's that first higher low, and price simply swept that extreme liquidity. So despite price pushing down aggressively, which is creating a lesser probability or less probable accumulation schematic, there was still the chance and the opportunity to actually get a rotation back up. And this was also in confluence with USDT dominance getting a retracement into extreme supply. So this was the 4th of September. And if we go to the distribution model on the 4th of September, right here, you can see that we were retracing into extreme supply from this distribution model perspective with our 1, with our 2, with our 3, and then with our extreme supply mitigation. And from here, we were anticipating on a distribution completion right there, while trading then the potential accumulation. So despite the fast move down, because I saw some sort of a local bottoming formation, which we're going to be diving into, in confluence with that USDT dominant distribution, I was still looking to potentially participate, but just definitely on lower risk due to the aggressive nature of the expansion from high to low right here. Now, if we're zooming in here, we already talked about flipping that demand that we were anticipating a bounce from into supply, which was definitely not good if we wanted to see some upwards price action, okay? However, I saw a lot of wicks here, right? I saw a lot of wicks right here. A lot of wicks at the bottom, leaving liquidity above. And whenever we're looking for an entry where there is room of error, you can trade it in two ways. If you zoom out right here, you will realize that this is your 30-minute market structure high. And price right here is making a low, a lower high, and a lower low. And we have supply right above that 30-minute market structure high. So the safe thing to do is to wait for a break of structure off that high, get a retracement, find your entry on the retracement, and then keep the stop loss above the higher time frame pivot point, and basically wait for a bit more safety, get that higher time frame structure shift, and then trade the higher low after you have seen the supply failure. That's one way to trade it. The other way to trade it is to find such a refined entry on the lower time frame in here that is allowing you to be up a decent amount of RR by the time that you come towards the supply, and then you can already de-risk yourself by taking partial profits at the supply POI and run it risk-free. And you can only do that if you have an actual return to zone towards that high. Otherwise, it's too risky. And what we were seeing here is that price action was leaving an incredible buy-side liquidity curve towards that 30-minute market structure high. So the moment price started to break structure aggressively back to bullish right here, after sweeping the extreme, you can see right here, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then boom, break of structure, right? We are taking the lows over and over and over and over and over again while keeping all the highs intact. You get the aggressive break, you see the expansion towards buy side, right? It's kind of like a local liquidity play. So the moment I saw that break of structure, that's where I re-entered. Did I enter with full risk? No, I entered with around a 0.4% risk because it's actually a 1-minute break of structure right here. I entered with around 0.4% risk because, again, you had that room of invalidation right there, which was that supply, which was high probability supply. And then because of this fast move down and this becoming very extended, it was simply lesser probability, okay? In my opinion, it should have simply gone up from here. However, I still got my technical confirmation, so I'm going to play, but I'm not going to play it on the same risk because this was a way higher probability entry with the TCT and TCT rather than just low time frame break of structure that has supply with room of error above. So I entered right there, put the stop loss below, and this was a pretty aggressive break structure. So, by the time that you're up here, you're not up a whole lot of a RR. Preferably, you're like up 3 to 4 R, so you can take 30 to 25% out of the position and run it risk free. Now I actually decided to simply go to bed. I simply decided to go to bed and see what price had in store for me when I woke up, which is a bit of a riskier approach, but since I had 0.4 risk on the trade, which is already lower risk, it really didn't matter to me what happened to this position. I was simply going to be sticking to the plan. And what we were kind of seeing is we got that move up, and then we got the rejection from supply, and we started a range formation in here. Now, because we got this aggressive pop-up on our entry, we created also demand at the pivot point bottom. And since the move up right here was relatively slow and price was kind of stagnating, I was anticipating on a potential DEEC model, where right here we are breaking structure back to bullish, confirming the model, and we immediately turn this into a distribution, okay? Where then we are anticipating, again, this is Mentorship 2025 material, exclusively available inside of the Discord for free right here. And I was anticipating, okay, we're getting a slow move up right here, so I would like to see some sort of a DEC, meaning we get a distribution right here, and then we get the expansion, and then we get the extreme demand mitigation, and we get the continuation. Okay, I have a post about this on my X as well if you filter on the word DEEC. And if that was the case, I would look to find a short right here to hedge the long, and then take profits at the low, and then if I see the breaker structure back to bullish, trill the stop loss to this low, add the risk back, and run it back up higher. That was kind of the pre-planning. And therefore also I could not trill my stop loss to break even here despite price being up there, because you have this demand, which is a reason for price to come back down before continuing towards the upside. So cannot trill the stop loss of any kind. So I'm simply sitting here waiting for the trade to kind of show me its hand. But I did already like the fact that we were coming up here, because it doesn't mean that we have a fake move up that immediately reverses back down the moment it hits supply. No, we're actually showcasing some signs of strength by actually ranging in this environment. So what happened here is we were pre-planning this, and then boom, price ended up pushing up super aggressive, right? Super aggressive. We still had that liquidity above, which is a reason why price went up that aggressive, but no DEC model. So we were simply running this position on around 10 RR on 0.4, actually more than 10 RR. Right here, around 12 RR running this position on a 0.4 risk. So if we were going to hit that TP, we would make around 3%, which is still extremely nice for a accumulation play like this. Now, the only thing is that this was Friday. I also had to go to the airport later in the day, quick trip on the weekend. But we were approaching that volume area high, and at 4 p.m. we had a lot of resistance. So we were sweeping this liquidity right there before the news in a pretty aggressive fashion, and we were coming at a resistance, a POI that previously also delivered an aggressive move down. So I took around a 10% take profit at the highs right there, realizing me around 0.2 to 0.3% on the trade, and then from there price came down super aggressive. This happened a bit faster than I would have liked in the replay mode, but price came down super aggressive after the news release at 4. And then right here on this close, I told the people, hey, I'm moving my stop loss to break even. So we entered right here. We took a 10% partial right there. And from there, we were looking to trill the stop loss to break even the moment this came that aggressive, and then we got stopped at break even. Okay, stopped at break even on the rest of the position, so it was a small winner, nothing too special or nothing too significant, and that ended up going lower, right? Took the liquidity, got a relief bounce, and formed a range going into the weekend, which is completely normal. Okay, completely normal. Now, because of this price behavior, looking at where price action is now, because of this price behavior, I don't want to use this range anymore as the starting point of my accumulation. Price had two opportunities from here and here to get towards that buy side liquidity above, which is still located right there. But we went up twice and we simply got rejected down super aggressive. So also pre-planned inside of the community, and I said, hey, if we take that low once more, and we got rejected back down, I'm going to be looking at this as my new range where I will look for district or accumulation plays that might sweep those triple lows that we have located right here below in higher time frame range discount. And then from there, look for a sweep of the low and find the accumulation plays on the third taps for the full reversal back up. And right now we can see the price retraced into that supply POI at the highs right there, and we're seeing a rejection back down. But this is basically what I'm looking at for a potential future entry, which is going to be, again, a move down, sweeping all that weekend sell side liquidity, sweeping that range low, and then from there we're going to look for accumulation entries to take towards new highs. If we don't get the accumulation entries upon taking that low, well, then that's very simple. There's no trade to be taken if the confirmations are not there. And then we simply push up higher from here, which is, in my opinion, a bit more unlikely. Then there's simply no entry for us because we tried 2 high probability entries and this is simply no entry in here. So waiting patiently for the next move. I do believe if we take this low once more, it opens the doors to high probability accumulation models. If you can continue with that return to zone, draw return to zone from the high towards the low of the third tap, wherever that might be, this could deliver generational runs all the way, potentially even back to new all-time highs. So still looking at the overall environment from an accumulative perspective, but 2 local plays right there got stopped at break even and stopped for a slight profit. And it goes to show again that you can still make money when you're wrong and you can lose money when you're right. Okay, it's all about the execution that matters and the consistent risk and trade management that we do on a daily basis. So looking at some new plays, looking at Pump Fund right here as well. I think I'm releasing this video tonight, so if you're watching this immediately, if we get a slow retracement into the supply POY, I'm looking to scalp short this back down to the range low in confluence with ETH, rotation towards the range low for the higher time frame accumulation. So I'm looking to trade this pair on Pump from the short side on ETH until turning that into a higher time frame accumulation. So we're going to see if that ends up playing out. That's the pre-planning from now. BTC, similar story. Again, everything that I do is traded live inside of the community. And I appreciate you all for listening. Peace out.